Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. If you're new to the channel, make sure to subscribe. This is the place to go for high quality, free trading education. Now, without further ado, let's jump straight onto the chart. In this video, I will be speaking about gold. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will be moving to the order flow, so the commitment of traders, which is the COT data, so what the non-commercials and the biggest speculators in the market are doing, which are essentially hedge funds, so the big players in the market. And by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which is currently testing a quite strong monthly supply and resistance area. From here, all this previous rejection to the downside was created. Again here, the market tested its zone and started rejecting it to the downside. At the moment, we can see how the market is testing exactly the same zone, from which once again there is the possibility to see a rejection to the downside. However, at the same time, we must acknowledge how last month the market created this candle here. Now, when you see a candle like this with a very long wick and a green body, usually the next candle is at least supposed to try to fill in the wick, so to essentially create a bit of a move to the upside before then creating a rejection to the downside. Now, this would align perfectly with what the market did already here and here when it was testing this zone. In fact, we can see that the market reached these quite high levels, which in this case the market has not reached yet. So there is the possibility to see a deeper test of this zone before then getting the potential rejection lower. Dropping down on the weekly time frame, what do we have? Well, from a weekly perspective, we can see how the market has now created another higher low. In fact, starting from here, the market started creating a series of higher lows and higher highs. We can see now how the market has just printed another higher low. So clearly, we have a market which shifted from a bearish market, creating lower lows and lower highs, to now a bullish market, creating higher highs and higher lows. Until the market will remain in such bullish state, there is still the possibility to see that deeper test of that monthly resistance that we have previously identified, before then getting the rejection to the downside, meaning that at least in the short term, we could expect more bullish price action to be created. Now, if we drop down on the daily time frame, what do we see? From a daily perspective, price action is quite clear. We have a market which is currently creating an impulse. Now, in general, after an impulse, if you want to measure the correction, you have to take your Fibonacci from the low to the high of the impulse leg. In this case, that would give us a 0.32 that is around here, and usually the 0.32 lines up with structure, meaning that we could expect this impulse to continue a bit more before then the market might start the correction. In fact, usually we would like to see the 0.32 lining up exactly with the daily structure, which in this case is clearly here. In fact, this is the level of previous daily resistance, again resistance here, and again here, which if the market will successfully break it to the upside, will be turned support at this level. So if the market actually manages to successfully complete this impulse and then go for a retest of this previous resistance turn support, this is where we would have the Fibonacci levels lining up with the structure, from which there is the possibility to have a quite high probability rejection to the upside for a deeper test of that monthly resistance that we have previously identified, before then creating the rejection to the downside. Now, I did speak about gold quite a few times in the past. I spoke about gold when the market was here. I explained all the reasons for which we could expect this rejection to the upside, and that is what the market gave us. Then from here, I made another breakdown explaining all the reasons for which we could expect first this correction and then more bullish continuation, which again is exactly what the market provided. Then from here, I explained all the reasons for which we could expect this correction and then the creation of a higher high before then getting rejected lower. And by the way, I will link in description all these previous analysis so you can go and check them out for more free education. However, what do we currently have? Now, before I continue here with the analysis from a technical perspective, let's first go and see what we have when it comes to the commitment of traders, which is the COT data, so what the non-commercials and the biggest speculators in the market are doing. Now, if we check the data precisely for gold, we can see how with the last reports, net positions have definitely been decreasing. We went from having 195k net positions at the top all the way down to a slow decline to 185k net positions. So already institutions are starting to shift their positioning from the bullish side to the bearish side. However, we can see that we still have a huge amount of longs compared to shorts. We have 253k longs compared to only 67k shorts, and we still don't see shorts getting added. In fact, we actually see shorts getting closed with the last report, with 2.2k shorts getting closed. This indicates that there is definitely the possibility for a deeper test of that monthly resistance, because from this high, this is a much better area for institutions to add their shorts, since already they're starting to close their longs. So clearly, net positions are getting decreased, but they're getting decreased from longs getting closed, not from shorts getting open. In fact, shorts are currently still getting closed, meaning that there is still the possibility for that short-term strength of gold that we have previously identified that is possible from a daily perspective. So if we will see this break above this resistance on the retest of this previous resistance turn support, there is the possibility for a break to the upside. So how we could be approaching this potential move? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you don't know what I'm speaking about when I say valid entries and these kind of things, you want to learn more, I really suggest that you go and check out the transparentfxtrading.com website. Here, you have the possibility to gain access to my entire courses with all the rules of the strategies. You also have the possibility to gain access to one-on-one private mentoring, the VIP market breakdowns with the Telegram signals, the COT data software, which is precisely the one that we used in this analysis, the trading station software, which puts together everything that you need as a trader all in one interface. And if you scroll lower here, you will see that at the moment there is a massive promotion in which you have a huge discount on the upfront price of the lifetime mentorship program from $497 all the way down to only $97, plus as an option, since I have partnered with the forex broker Blueberry Markets, if you open an account with them after you join the mentorship program from your student dashboard, there is a button for that. You can get a full refund credited back into your trading account if essentially you move your trading there. And if you scroll lower, you will see that at the moment there is still time to join before the offer expires and everything goes back to normal. And directly from here, from this button, you can join to gain automatically access with the email and password that you will create during the checkout process. So definitely looking forward to have you on board, or at least go and check it out at transparentfxtrading.com. You also find the link in the description of this video, just here below. If you enjoyed the video, make sure to smash that like button and comment below. It really does support the creation of more free analysis, education, and updates for all of you. And I will see you in my next breakdown.